Bitcoin outcompetes gold in terms of stock to flow, and like the next two epochs, it's going to get very competitive for these like individual Satoshis. The price to run a gold full node is really high. Like you got to spin up a refinery, you got to melt down the gold bar, you got to recast it. Like that's expensive. Like the barrier to do that has been lowered tremendously with Bitcoin. You can do that for 15 cents. I mean, we're only 16 years into this, and the president's like, hey, we're going to have a U.S. strategic reserve of Bitcoin.
Yeah.
I'm like, wow. I thought that would be like another 10 years out, probably. Michael Saylor, on the other hand, like, instead of managing for cash flow, he's managing for capital gains. He's managing with leverage. He's managing with debt. Now he's issuing perpetual preferred shares that are like a perpetual cash outflow. So there's a negative not just no cash flow. There's negative cash flow. I like to just operate a different way.
This podcast is entertainment, not financial tax or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Trace, thanks so much for taking the time to record.
Yeah, great to be here. Thanks for having me and making it work.
Absolutely. I kind of want to start off with yesterday. We were just talking about it. You debated Peter Schiff, not really debate, but he took it as one.
He took it that way.
How do you think it went overall?
Oh, I thought it was fine. I wish Peter had stayed a little bit more on point. I wish his arguments had been a little bit more clear, and a little bit more correct. But that's Peter.
Yeah.
So I think it was a lot of fun. And I was surprised just how many people showed up. It was standing room only on the main stage. I think JD Vance's was like a little bit more. But I was kind of surprised at that.
Yeah.
So it's good that we're able to have fun.
Yeah.
And we didn't really get into the substance of the gold and sound money Bitcoin conversation that we could have really had. Mm-hmm. So it is a little bit disappointing that Peter's like talking about housing bubble stuff.
Yeah.
When we'd be talking about like the sound money. But apparently he doesn't think I understand anything about sound money. So, okay.
Yeah. Where do you think Peter goes wrong when it comes to Bitcoin?
Well, I hit on it like 4 times in the conversation with him about subjective value theory. And then he restates my position that I said Bitcoin's got intrinsic value. And it was like, no, Bitcoin's limited in amount by its intrinsic characteristics, but there's no intrinsic value. There's subjective value that each individual is placing on the thing, or the good, or the service, or whatever. So, like, I don't know how you even have a debate with someone who's, like, hearing your conversation and then restating it in a misrepresented way. And so, anyways, like, if he goes wrong with something as basic as subjective value theory, you start from a wrong premise, no matter how good your reasoning is. And his reasoning is not very good anyways. You're going to come out with a wrong conclusion.
Yeah. Yeah, I know he brought up intrinsic value. He's like, Trace said intrinsic value. And I was like, wait, what?
I didn't hear that.
Yeah.
So I had to wait for him to finish his like 2 to 3 minute, like, roundabout, whatever he was doing, and come back to that and be like, no, I didn't say that. And you're completely wrong. And then the other place that he goes wrong. So 1 is subjective value theory. 2 is the theory of entrepreneurship. And so I had to like lay out to him that Satoshi was an entrepreneur. He's a monetary entrepreneur. He's delivering a monetary good to the market. And guess what? You, as an entrepreneur, you try to guess and understand what other people's subjective value is. But you don't like bash them over the head and tell them what it is. Like you try to persuade them to buy your good or service, unless you're the government, or some other malactor. But when that takes place and there's not this free trade or exchange, then one party's worse off as a result of the interaction. When you engage in free commerce, both parties are engaging in that transaction because they feel that they will be better off as a result of it. And that's where specialization of labor and these other things come into play. And so like he didn't, I don't think he even understood that, like, the point I was making, like, Satoshi was a brilliant monetary entrepreneur, figuring out what the market wanted for a product and delivering that as a good to the product.
Mm.
And, then I had to kind of tease him a little bit, which I'm not sure he even got the joke, but I said that, under prices, when we look into Austrian theory, the entrepreneurs that correctly assess the market and deliver a good product, they have profits. And those that don't, like Peter, have losses.
Yeah.
And so, or they miss out on a tremendous opportunity because they don't forecast the market and market demand properly. And so, these profits, these losses, subjective value theory, like if somebody wants to buy Pokemon cards, that's their prerogative.
Mm.
Like if they're putting value on those things or on a Black Lotus or whatever it is. So like and I think it comes from just a totally wrong mindset. A mindset that's not respecting the individual and the dignity of the individual and their ability to make choices. And that's where he's really going wrong, is like that. And that's deep in the psyche.
Yeah. He definitely has massive losses denominated in Bitcoin.
Gigantic, like they're titanic losses. I'm sure he's doing fine, but like, and maybe he buys it closetly and like, this is all a charade that he's like trying to talk publicly, but I don't think so, because I mean, I tried to have a discussion with him at $7 Bitcoin on camera, and he didn't want to do that because, he wanted to protect his image and everything, instead of trying to get ideas out to the market, objectively about potential new sound money product. So anyways, it's interesting to see how everybody's interacting in this space, the subjective value theory. Like even now, people that strut around as Austrian economists are still getting it wrong when it comes to magic internet money. And then they just are living this like Bitcoin derangement syndrome because of that. Definitely.
Another thing that I think that he kind of gets wrong, at least from my perspective, is like you have Bitcoin scarcity, which is far superior than gold, I would say. And then it's portability, which is far superior than gold. But he gets stuck on like, oh, well, Bitcoin's only use case is money. Rather, like gold can be used for dentistry, he said, or technology or whatnot. Like, how would you reply to someone like that, where it's like, well, Bitcoin has no other use case than being money?
What about Taproot's Wizards? Like, we want cat JPEGs on Bitcoin. Like, there's a use. Proof of existence. When you like take a PDF and you put it in the blockchain and you're able to anchor it, now you can prove that PDF exists, or that file or whatever existed at a point in time. There are other ancillary uses for Bitcoin besides just the monetary use. But like I mean, all of these other uses, you're just going to add a monetary premium to the asset, and those other uses are going to be competing against that monetary premium, and you'll find like substitute goods for those things if the monetary premium like gets too high relative to everything else. But gold's a wonderful asset. Like I don't have anything bad to say about gold. In fact, in some areas there is a degree of superiority to Bitcoin. You mentioned this monetary characteristic of portability. Okay, so one way of looking at portability is the ability to transfer over distance. And with Bitcoin, we're now able to transfer over a communications channel, like a fiber optic line or something, because it's data. Obviously, you can't email gold somewhere. Well, what we're seeing getting abstracted around monetary transactions by governments, especially with things like the Bank Secrecy Act, is this attempt to define portability as customer to customer and not physical distance. So, for example, if you have your brokerage account and you want to transfer stocks between your E-Trade account and your Interactive Brokers account, like you can do that as long as they're titled in the name of the same person. And but if you try to transfer from my E-Trade account to your E-Trade account, they're not going to let that happen. Even though it wouldn't go anywhere different geographically or even institutionally. They're not going to allow that portability, you could say, from person to person, right? And so like there are different ways that we can look at some of these monetary characteristics and how we need to adapt to them based on changes in the circumstances in the market. And gold, for example, we've got LBMA gold bars and we've got gold coins and we've got serial numbers on the gold bars. And, the ETFs, they like to say, oh, we've got these serial numbers in our vault. And sometimes the same serial number is showing up in multiple like audited financial statements. You're like, whoa, how'd that thing get around so fast? And so what do the Russians and the Chinese do? Well, they like to buy the gold bar and they like to melt it down and they like to recast it so it's got a different serial number so that it's more portable, right? So that there's not that transaction history associated with it.
Interesting.
And so, there are monetary characteristics and uses for gold that you don't necessarily get with Bitcoin. And the market, values that. You look at gold, $22 trillion market cap, $500 million of new daily emission from the mining. You've got maybe $2 trillion of market cap with Bitcoin, $50 million of daily emissions. So gold is like order of magnitude larger in terms of economic scope and scale than Bitcoin is. And as a result, it very much is still the center of the financial universe. And as we've had this currency debasement over the last, 6 months of 2025, gold's market cap has outperformed Bitcoin's market cap. So that was part of the discussion I hope that Peter would have brought up is like, hey, this is where gold's like doing really well and your Bitcoin, your magic internet money's not. Like, what's the deal with this? And we could have had a substantive discussion on monetary characteristics and like things that go into making something sound money and why somebody might subjectively value these different assets in different ways and everything. But instead, he's like running around like a squirrel on meth or something.
Yeah. Do you think that eventually one day Peter will actually buy Bitcoin and publicly say?
Probably already does. I don't know if it's like, I think he needs to keep dangling along the Bitcoin community because like they just love a distraction. And so we got to have a distraction on Twitter. So Peter's the distraction and he just milks it for everything it's worth. I mean, he gets hundreds of thousands of impressions on his posts and, and that's controversy definitely stirs discussion and everything. So like, he's doing good in that sense. He's getting attention. I don't know that it's getting him customers.
Yeah.
If that's his goal. And if his goal is to like move forward and talk about and help people understand sound money, I don't know that it's accomplishing that either. So not sure exactly what he's doing or why he's doing it. Other than, let's pat Peter on the head because like he can strut around and think he's so smart about something.
Yeah. When you think about constructing a portfolio with Bitcoin, gold, and other assets, like how do you think about that currently? Like, is Bitcoin a large portion, a greater portion compared to gold, or how do you think about it in general?
Yeah, I mean, I wish I had some of the Bitcoins. I went boating the other week. They're all gone. But I mean, I've always kind of, and I mentioned this on stage, like, I have gold UTXOs, like a gold coin, right? That's 25 years old. I mean, I bought it 25 years ago. And so, I mean, that's almost twice as old as Bitcoin exists. A long-term Bitcoin holder is 155 days on the HODL waves. Like, I don't think so. Like, that is not, like, sound money is over millennia. The Roman Empire's gone, the Ottoman Empire's gone, like, gold's still here. So, we have to kind of change that time preference, change that way of looking and thinking. And if we were to like reason by analogy, I kind of see London like gold and Columbus like Satoshi discovering the trade winds that enables the profitable building out of the Americas. And then you got the map, like Manhattan is like Bitcoin, and so I don't see any reason to sell the London real estate. Like ever. I mean, like you just hold that stuff and you rent it out and maybe you take some of the money you made from that and you go to this speculative new land and you buy some of the real estate there. Then you start building it up and you start renting it out. So that's how I kind of see the role of sound money in the portfolio. I like gold. Like I still have UTXOs from decades ago. I add to gold position on a pretty regular basis. I like to keep the overall portfolio construction in a measured way. And so with gold, I like to see that as like, what's the monthly passive income? And that's how much physical gold put in the portfolio. So if you got like a 1 ounce gold coin, like you have $3,300 of passive monthly income.
Interesting.
And so as like, as your monthly passive income grows, like you grow that basic gold, or maybe you grow the basic gold first and then focus on growing that passive monthly income.
Stop asking how to value Bitcoin. Start asking how to value everything else in Bitcoin. I recently co-authored a new report from Unchained and Strive, Vivek Ramaswamy's asset management firm. It's called Repricing the Economy in Bitcoin, and it introduces a new framework that changes how we value everything. Read it now at unchained.com/frontier. That's unchained.com/frontier.
Because I mean, like, this is where I have a different approach and philosophy than Michael Saylor. Michael Saylor, I look at the investing force, from Star Wars. You got the light side of the force, you got the dark side of the force. The light side of the force is equity-based, cash flow, no leverage, very safe, conservative. Like, you're not really going to hurt yourself on the light side of the force. You're just like, you can grow it indefinitely. In a lot of ways, Buffett manages Berkshire in this very kind of light side of the force way. In his letters to shareholders, he's like, around here at Berkshire, debt is a 4-letter word. Michael Saylor, on the other hand, like, instead of managing for cash flow, he's managing for capital gains. He's managing with leverage. He's managing with debt. Now he's issuing perpetual preferred shares that are like a perpetual cash outflow. So there's a negative not just no cash flow, there's negative cash flow. I like to just operate a different way, in terms of my portfolio construction, which, is very, never a chance for a margin call, never a chance for, like, it's just a financial fortress. And it just like churns cash, like into my treasury. And then, I have to figure out what to do with that cash. And sometimes, and I look at gold, Bitcoin, and US dollars as cash, like short-term asset that, like, I look at them all as cash, just kind of a different form or different characteristics. Euros, I look as cash, but I don't really hold euros or yen. And I actually like calculate the metrics of performance in the portfolio, both in gold, Bitcoin, and dollars. So I'm like, I want a P&L on all three, or like I might not have done the right thing, with the allocation. Now, there's a separate section that for like the operating portion, there's a separate section for like the mark to market and stuff. Like if gold's going up a bunch and Bitcoin's gone down, like, I'm not going to mark to market the losses, in my calculation, because I know that I'm like trying to balance between a bunch of different three things. But every month I want to see that like I have a P&L in those three assets.
Interesting. Yeah.
So I'm stacking. Well, I don't usually buy gold every month, but like Bitcoin, like there's more of that every month coming in, like through, different strategies that we got.
What do you think's the end game with MicroStrategy? Because you brought up how like they are borrowing money effectively to buy more Bitcoin. Is that going to be a sustainable strategy very long term? But is he betting on like hyper Bitcoinization and the end of the dollar to some extent? How do you think about it?
Well, he's definitely betting on capital gains as opposed to cash flow.
Yeah.
And to me, betting on the capital gains is just kind of risky. Like, I like to go after the cash flow, and if capital gains follow that, like, I'm happy as a clam. So, it's just different strategy. Like, if I've got triple net leased real estate in there that's like leased to Walgreens or Amazon or something, like, that's going to pay every month for indefinitely, right? Because I can always like lease that out. But, if Bitcoin goes up, then the value of that piece of land measured in Bitcoin is going to decrease. And so like I'm juggling between all three of these assets as a numeraire, or as like the presentation currency. Saylor especially like BTC yield per share and all this stuff. It seems like he's trying to shift to this, like using Bitcoin as the sole numeraire or the sole thing to optimize or enhance for. And I guess I've just been around enough of these Bitcoin cycles, like both up and down in major swings, that like I want to, I like having multiple legs on the stool.
Yeah.
And then just reinforcing like all of that. And, and I guess as part of Bitcoin maturing and getting less volatility and, all of this type of stuff, like, we're not going to see a 452x increase during a 4-year epic. Like that's probably not going to happen again.
Yeah.
It could, I guess, if like there's hyperinflation, but
Yeah.
I don't think we're going to see hyperinflation either. So like, but that's where the entrepreneur like makes their choices and their allocations of capital, and you get profits and losses, and but like, and you can get lucky, you can get lucky betting on capital gains, and lots of people do that. But it's capital gains also seems to be very much an artifact of a fiat currency system. If we were on a much more sound money system, I think, and tax policy and everything were much more favorable to cash flow things instead of capital gains things, I think we would be much like, not only would we have better allocation of capital, the business cycle would be more moderate, like more like less amplitude in the business cycle, because we wouldn't be like running these different bubbles and everything.
Yeah.
But that's the system we live in, and that's how Saylor's like performance is kind of based. Wall Street's looking every 3 months.
Yep. Yeah, no, that makes sense.
So I don't know that he's got like the time horizon that he wants. And then, and then to his credit, he gets to take advantage of, other people, buy, and there might be a run up in the stock, and then he can hit the at the money.
Yeah.
So there's like an ability that he's got there to kind of, like go after, like it's just an interesting mechanic he's got. I guess I won't say too much more on that, or like intentions behind like why he's hitting at the money the way he does and everything. But it's like, it's pure financial engineering. I don't see the fundamental business use case contained in MicroStrategy. And even that like was kind of a flop, and he has wanted to get rid of it. He's even said kind of publicly that he doesn't want to have the business in there because it like decreases the vol and everything.
Yeah.
But when we're looking at like Bitcoin vol, it's declining. What's he going to, and he's talked about it, like, if we have like a 15 vol asset, like gold with Bitcoin, except the vol is like coming out of Bitcoin rapidly.
Yeah. Yeah. I saw you talked about that recently, and I think you said you wish the price was higher when the volatility was this low.
Yeah, exactly.
Can you expand on like what you mean by that and why?
Well, yeah, I mean, like you're not gonna have very large swings in price with gold.
Yeah.
Because it's already $22 trillion.
Mm-hmm.
And so, if Bitcoin were still a 100 vol asset at 110K, the probability that we would be running to 250K would be higher. Mm-hmm. The market would be pricing that.
Yeah.
And so, as these vols are compressing, it's increasingly like the market is increasingly forecasting a price that doesn't kind of run as fast in terms of that capital gain. So I think what the market is helping us understand is that the wealth creation the wealth creation era of Bitcoin is largely in the rearview mirror, and we're moving more into just a pure wealth transfer era for Bitcoin, where it's a sterile asset like gold, and its price going up and down relative to the other assets is mainly just a function of like capital flows between the two.
Mm-hmm. When you think about gold's market cap of 20 trillion or so, like you mentioned, and Bitcoin's at 2 trillion, do you think Bitcoin will eventually surpass gold, or like, and like, do you have a time frame on when that might occur? Or do you disagree and maybe it won't pass gold?
I think there's a chance it could pass gold. I don't think it's like anytime soon. Probably at least 10 years out at a minimum. But then we're here a lot sooner than I thought we would be. I mean, we're only 16 years into this, and the president's like, "Hey, we're gonna have a U.S. strategic reserve of Bitcoin."
Yeah.
I'm like, "Wow!" I thought that would be like another 10 years out, probably. In terms of the network effect.
Yeah.
But we're just jump started on this sixth network effect of the financialization a lot sooner than I thought it would come. 2020 it really seemed to start kicking off, and here we are 5 years later, and we have the U.S. president talking about it. We don't have a lot of the large other global players talking about it. Russia's had banned it, China had banned it, like they're not too friendly towards it. Treasury Secretary Bessent has said that Bitcoin is becoming a store of value. Like that means it isn't really one yet.
Yeah.
And I think that vol coming down is part of it, becoming that store of value. And that, which means you're going to have, it's really going to have to be spot-led rallies that are going to be like moving the price up. And one thing that I've gotten a lot more appreciation of for gold is just how much of a store of value it is. Because we look at Bitcoin and we look at how much capital has had to come into Bitcoin and has to keep coming into Bitcoin to keep this proof of work and this 110,000 price and this 65,000 price up to 110. Just how much capital has had to flow in to do that. And then gold's sitting here at like an order of magnitude larger.
Yeah.
It's just gigantic.
Yeah.
I knew gold was big, but I didn't realize it was that big.
Yeah. It is crazy how big gold is compared to Bitcoin.
Yeah, because
to me, I spoke with Adam back like a couple weeks ago, and he said like Bitcoin could become a $100 trillion, $200 trillion asset. And, that's significantly larger than what it is today.
Yeah, which I agree that it could.
Yeah,
and part of this is where is humanity going to be storing their excess productivity and their excess earnings?
Yeah,
and that goes into gold and it goes into the currencies like dollars and everything. But, Bitcoin outcompetes gold in terms of stock to flow. And the next two epochs, and that ratcheting down of the new emission, it's going to get very, very competitive for these individual Satoshis. But, the other side, to move it to $100 trillion asset in today's purchasing power, because if they just keep monetizing the debt, what's $100 trillion going to be, right? But in today's purchasing power, that just, man, it takes, because not only are you dealing with the new daily emission, but you're dealing with the weight of the chain. Those holders that you move $1,000, that's $19 billion of market cap.
Yeah.
And that induces supply comes out and wants to take short-term profits, so to that trek up to 100 trillion in today's purchasing power, it's going to be a big long trek.
Yeah.
But gold's been around for 2,000 years.
Yeah.
Where might Bitcoin be in another 1,000 years, right?
Yeah. Yeah, and on the volatility topic, I looked back at 2017 and late 2016, and volatility, I think was declining, kind of going into that parabolic bull run. Is it possible that we could be seeing that right now, or do you doubt that? Do you think volatility is actually permanently declining for Bitcoin?
I've seen it permanently declining, at least over the last 5 years.
Yeah.
It's in a structural decline, and I'm very sensitive to it. We pay very close attention to Bitcoin volatility, and we're having to change our models and stuff like that because of this kind of decline in vol. But who knows? Might be wrong. I'd love to see higher vol.
Yeah.
But and the supply of vol is still very small. So, you know, if we had more supply of vol and demand is staying the same, like price is just going to decline even more.
What do you mean by a supply of vol?
Well, you look at our derivatives markets on top of Bitcoin, and it's like 25,000 Bitcoins on given expiries, like should be like 250,000 or 500,000. You know, so there's like not a lot of supply of like Bitcoin vol.
Gotcha. Interesting.
I mean, think about it. Like, say if Saylor tried to sell vol on 5% of his Bitcoins, it'd double the supply of vol in the market.
Interesting. You talked about MicroStrategy earlier, and Saylor made a comment the other day about how he doesn't want to do proof of reserves for the Bitcoin that they hold.
Yeah.
I'm curious to hear your take on that, especially since you created the proof of keys holiday.
Right. Yeah, I mean, it's like Bitwise can do it with their ETF, like Metaplanet could do it. I mean, he should be using like institutional grade quality custodians.
Yeah.
Like, I think his argument holds for like individuals, but not really for institutions and companies.
Yeah.
Like, why not publish them out there? I mean, it would really help in terms of like, the market being able to assess the quality of those UTXOs that MicroStrategy has. Maybe they're like, oh, we don't like the counterparty risk associated with these ones because they're being held with this particular custodian.
Yeah.
And, they're like, hey, like withdraw them out of there. But maybe he doesn't want to withdraw them out of there because maybe he doesn't think the custodian actually has them. I don't know. Like, you never know until you try to move them.
Yeah.
And the spotlight, the sunshine is only a good disinfectant for that. So yeah, I don't think it poses any type of a security risk to MicroStrategy. And if it does, then like they're not using the custodians in a proper way to fulfill their fiduciary duty. I mean, how come Bitwise can do it? How come how come Metaplanet can do it? How come a lot of the exchanges can do it? Like Kraken, like there's a bunch of these proof of reserves that are done. Like, why can all these people do it and like MicroStrategy can't do it?
Mm-hmm.
So, like, yeah, I just, how do we know that he's actually got those Bitcoins and that they're not encumbered? Because like, what if they're encumbered like in a surreptitious way by the custodian? And Caitlin Long has done phenomenal work in this area, especially based on some of the things she learned, like restructuring the pensions and, how these omnibus accounts, like, can get encumbered and the auditors and the company might not even know that the securities have like contingent liabilities on them. So I would think like, just why don't you find the very safest place to like put these things and like move them all out of the less safe places and put them there.
Yeah. Yeah.
And I think Arkham has done quite a bit of intelligence on like trying to map a lot of the MicroStrategy holdings, which is good. And so, okay, since they've already like mapped it, like why don't you just confirm it?
Yeah. That was interesting how Saylor was like, no, we're not going to do that. And then Arkham came out and was like, actually, here they are.
Yeah.
Maybe.
Here are all of them. Yeah. I mean, and it shows a lot of them are at Coinbase, for example. Like, why have them at Coinbase?
Yeah.
Like, I don't know if that's why don't we move them into something that's like a little bit more like solid in terms of the legal regime?
Yeah. Are you concerned with like coins getting, kind of centralized at a select few exchanges? Like I believe like Coinbase has maybe like 2 million something coins if you count
supposedly.
Coinbase. Yeah, supposedly. Like is that concerning for you or no?
Yeah, I think it's like if we want to deal with if we want monetary sovereignty, like this is a big giant issue. The price to run a gold full node is really high. Like you got to spin up a refinery, you got to melt down the gold bar, you got to recast it. Like that's expensive. Like the barrier to do that has been lowered tremendously with Bitcoin. You can do that for 15 cents. And it takes 10 minutes. Like, So you can flex those monetary muscles like very easily with Bitcoin. And so, this was like Murray Rothbard's anti-banking league idea where he's like, hey, let's just all withdraw our deposits from the bank on the same day.
Yeah.
Like, just for the fun of it, to see what happens. Like, that was kind of the inspiration for Proof of Keys Day. And that's a way that, you can flex those monetary sovereignty muscles as individuals and as companies. And so I think it's good to have that type of stress testing happening on a regular basis in the industry. And so as more and more UTXOs or even economic exposure gets allocated to the ETFs or gets allocated into the big corporates that, don't want to like kind of have the transparency, even though it's possible. I think that just begins eroding at some of the ethos of the monetary sovereignty in the space. And, that ethos needs to be there. Otherwise, like forks could happen. And if you're not running your own full node and you're not holding your own private keys, and you're relying on an economically substantive node that is BlackRock's, and BlackRock and Fidelity and like Coinbase all agree on a hard fork, like, what are you going to do about it?
Yeah. It's a great point.
And a lot of the, when you go read a lot of the prospectuses or you read like the fork policies and all these things, like, they're kind of a little squishy. I've actually thought of including clauses in some of our legal contracts that like, the transactions have to confirm in accordance with like version 0.29 consensus rules, for example.
Yeah.
Make that part of the is to confirm or something.
Interesting.
Add in like the specific source code that we're going to use to verify whether, like, if you return the collateral or you're paying us premium or whatever, like we're only accepting it if it follows these rules.
Yeah. That's cool. Very cool to think about.
Yeah, it's stuff we have to think about because like with gold, you have that in LBMA contracts and you have like chain of custody and indemnification agreements. So if like Metalor gives G4S a gold bar and it's not got actual gold in it, like there's an indemnification agreement. So G4S can go back and be like, hey, you got to give me real gold.
Yeah.
So they have that already kind of built out in the LBMA system. And when you take a bar out of that custody arrangement, it loses like 5 to 7% of its market value because the cost to run a gold full node is so high. Because you have to melt that thing down and recast it to like verify the quantity and quality of it. And so, we might have to increasingly like add things like that into our different trade con firms and everything as an industry, just to like be sure they're not going to give us pyrite.
Yeah, fair. What do you think about the current macro state of the world? Like obviously you were in gold, then you were very early to Bitcoin. Like, are you concerned about the current macro state? Like, how do you think about the dollar system right now? Like you mentioned, you didn't think it was going to hyperinflate, which I would imagine that's a good thing for all of us.
Yeah, I was talking with the state treasurer about this because he was opposed to one of these strategic Bitcoin reserve bills, and I was like talking with him and a couple of his deputy treasurers about it, and I was like, look, like Bitcoin is chaos insurance. Like the price of the premium has gone up with the price. Like this is what you would want to own as things get more chaotic. And so as things get more chaotic with tariffs and potentially capital controls, like, oh man, like stuff's going to get real crazy if like capital controls get locked down. So, because we haven't really had capital controls in a meaningful way for a few decades.
Yeah.
But, like it could be tariffs and then capital controls. And, Bitcoin is just going to be great chaos insurance for any of that type of situation.
Do you think that that's coming? Like, is that a high probability or?
Bitcoin price is going up. Like I think
market's saying that.
Yeah, market's kind of saying it, right? I mean, why else would somebody want to own this type of an asset or gold? Why is gold going up?
Yeah.
I mean, gold's market cap has outperformed Bitcoin's market cap in 2025. Like, why? It's because, this uncertainty, this potential chaos is all brewing.
Yeah.
I mean, what if World War III that we're already in, like, escalates? I mean, Ukraine just sent a bunch of drones into Moscow, like tried to assassinate Putin in his helicopter. Israel, Gaza's fomenting, like China, Taiwan. What if these conflicts like really explode?
Yeah. Yeah, the gold market cap, increasing on a nominal basis by so much is interesting because like I've looked at the gold ETFs and like, there's not too much inflows to that. Is it like, why do you think it's gone up so much, gold in particular? Is it countries buying physical gold? Is it individuals buying physical gold?
Yeah, well, it's definitely got to be countries, right? I mean, to be moving stuff on that scale.
Yeah.
I mean, this is like geopolitical.
Yeah.
In a big way. And yeah, maybe the US is like draining the physical gold like back onto its shores. Yeah, and then it's interesting like how it you get this very odd Bitcoin behavior too, like Germany selling 50,000 coins.
Yeah.
And then Bitcoin going up.
Yeah.
It's like, why'd that happen? It was funny, like back probably 10 years ago, I was at a conference over in Europe, and there's a guy from the Bundesbank, and we were talking about the gold and Bitcoin markets and everything. And it kind of he was like, well, I'm not sure that happens with gold. And I'm like, sure it does. Like, you guys are occupied. You don't get to make your own decisions. Because we got a lot of U.S. troops like occupying Germany. Yeah. So, I think that there's a lot of stuff in flux geopolitically with the Trump regime kind of, changing big policies. Mm-hmm. And as a result, like, capital is moving around. Mm-hmm. And we're starting to see that manifest itself in the gold price.
Yeah.
And consequently a little bit in the Bitcoin price too.
Yeah. It's definitely interesting times. Do you believe in like the idea of hyper Bitcoinization at some point, or do you think that we're always going to have like gold, the dollar, or maybe not the dollar, but maybe the dollar and Bitcoin kind of coexisting for a very long time?
Yeah, that seems to be kind of the policy coming out of Washington.
Yeah.
An analogy would be search results. Like the top result gets 55% of the traffic. Yeah. The next result gets like 30%. The result after that's like 20% or something, 10%, 15%. And then like all the rest, like out to millions, are going to get just like a tiny, tiny slot of it. Okay. So the first search result's gold. The second's probably the dollar. Third, fourth, fifth is you're looking at like euro, yen, yuan, and Bitcoin. If the U.S. has if they're able to dominate the gold and dominate the world reserve settlement currency and extend its influence through stable coins, yeah, and then dominate like what could potentially disrupt those two, Bitcoin, yeah, like now they own all three search results and they can box out the other currencies from even getting, the best they could do would be number 4.
Yeah.
Right. And so I think like, and that, if that's kind of does play out, you could see the dollar getting extended another 20 to 40 years probably, because you got this Bitcoin component to it. And how we usually deal with these situations of excess debt, I mean, in the Old Testament, you would have a year of Jubilee.
Yeah.
Just forgive the debt. We don't really do that now. Governments like to just default on the promises over time through inflation. And you might get something. The central banks actually have, like, on their balance sheets, they'll have a gold revaluation account. And so you'll just revalue the gold, kind of like what Roosevelt did, from $20 to $35. Now it balances the balance sheet. And so, and Trump even floated this. He's like, well, maybe we'll pay off this $36 trillion of debt with a little bit of Bitcoin.
Yeah.
Like, what does that actually mean? It means, like, if they can seed Bitcoin out on a bunch of personal and corporate balance sheets, and then have that Bitcoin price go up relative to the debt that are on those balance sheets, like now you can fix a whole bunch of balance sheets.
Yeah.
Both personal, corporate, and potentially like governmental.
Yep.
With a Bitcoin revaluation account. So that there's the argument for, 110,000 Bitcoin to like, $1 million Bitcoin.
Yeah.
Relatively quickly.
Yeah.
It's like, oh, we're just going to do a debt jubilee by like having Bitcoin go up
Yeah.
and getting Bitcoin seeded out on everybody's balance sheets.
And that kind of, I guess, relates to Senator Lummis's bill, the
Yeah.
Bitcoin Act. Like, what do you think that might actually get passed? And like, what would happen? Like, would Bitcoin go to 1 million? Could it go to 10 million? Like, how do you think about that?
It could get so crazy, right?
Yeah.
I mean, if China and Russia have been taking advantage, like going after the Achilles heel of the gold price suppression scheme, the Achilles heel being physical bullion, and they've got the physical bullion, like we can't get out of this debt trap with like the gold revaluation account because it's going to benefit like our geopolitical foes, right? So we have to find some other thing to do it with.
Mm-hmm.
And I don't know any other thing out there besides Bitcoin that's like kind of doable.
Yeah.
So yeah, I mean, like that now overnight, I don't think so, but because I think her bill would try to acquire the coins like a certain amount every year and probably like over a TWAP or something, or, or they could, but there's all types of stuff they could do. They could give, you don't have any long-term capital gains on your Bitcoin if you pay taxes with your Bitcoin.
Yeah.
I mean, if they're the government, they can do all types of stuff with changing the rules. And I don't think it's I don't really think it's in their interest to pull something like a Executive Order 6102 with Bitcoin.
Yeah.
Because that would undermine their ability to like really have a revaluation of the debt with it. So they need it to be distributed out to everybody. Mm-hmm. And as long as they can be taxing it, like, you give up some of the gain in your long-term capital gains tax. So, I think it's a tool that they can use, and how much more it's going to get out to everybody, or like hyper-Bitcoinization to replace the dollar is the medium of exchange. Like, we have a lot of wood to chop there as an industry. Lightning hasn't necessarily actualized to the degree that we would have hoped it would.
Yeah.
We like El Salvador gave everybody a little bit of Bitcoin, and like that didn't work. Yeah. So, changing the human behavior is kind of a hard thing to do also.
Yeah.
And maybe the L2s are like Visa letting you just pay off your credit card with Bitcoin or something like that. Yeah. So I think stuff is morphing, and, just based on a lot of individual decisions on how people value and want to use stuff. And so I think that plays a role in it also.
Yeah, that makes sense. You took some time away from Bitcoin, and one, I'm really glad personally that you're back, because I thought you were a great speaker when I was first learning about gold and Bitcoin to begin with. What made you decide to publicly come back and start talking about Bitcoin?
Oh, I mean, it's been very busy building out this sixth network effect of the financialization. And, I did all like my podcasts and all that stuff, like at my own cost, my own expense, so I didn't make any money like doing that. Like, there weren't advertisers, and even the ones that could advertise, like they didn't have any money to, because the industry was so small and like bootstrappy and growing and everything. And so, when you're looking at life and priorities, like, I think, appreciate just how much time and effort and even costs it takes to create like the new content and everything. And so, there's just like a to-do list, and like you got to draw the line somewhere.
Yeah.
And so now, we're like with the family office, I got a great team, on board. We're cranking through stuff. We're getting a lot of work done. We're making good P&L. And so the time and the cognitive load is starting to lift, because, building stuff like takes thought and everything. And when you're doing that, you can't necessarily like be thinking about and doing other things. So, it's more kind of all of that happening. And I think it's good to like reinforce these principles of monetary sovereignty into the ethos of Bitcoin, like help people understand, well, ask the question, like, why are you really here?
Yeah.
Are you here because you want a number to go up that's like held in an ETF that like is 3 times removed and encumbered like, or are you here for monetary sovereignty? Like what are you here for? And helping people understand and explain that, I think can help reinforce kind of our Bitcoin ethos and our monetary sovereignty ethos overall. And plus, it's fun. Like the battlefield of ideas is fun, and so like it's a good hobby to have. Keeps the mind sharp. And there's always like stuff to learn. Like now we got geostrategy, like geopolitics, like moving into the space. Like, I mean, I talked about this theoretically, over 10 years ago.
Yeah.
Did a 2-part show on Max Kaiser's show about like, maybe a little country will pick it up as a dagger or a shield, and look, El Salvador's done it.
Yeah.
And they're like cutting their way out of like the IMF trap with it.
Yeah.
So, it's really cool to kind of see the theory becoming practical. Then it's like, oh, well, now that it's becoming practical and we're learning new things through the behavior that's actually going on and the stuff that's getting actualized into existence, like, oh, where's it going to go from here?
Yeah.
That's kind of a fun exercise to be engaged in.
Definitely. Is it surreal seeing like a United States National Strategic Reserve in El Salvador, considering like you were talking about this very, very long ago?
Yeah, I mean, like this is magic internet money. I mean, I started publicly talking about it at $1 million market cap, like 25 cents. Like, it's like, and people would think I'm crazy, like a three-eyed fish, It's like, holy cow, like, and now here we are. And to go back and look at some of the older content, and just how prescient it was, and all things considered, like how accurate it was, because we're iterating and we're learning and we're digesting and understanding, and like the thoughts begin crystallizing. This takes time and experience and everything to really have that happen, and so and seeing different people take different strategies, like. I was talking with Barry Silbert at $5 Bitcoin, and he wanted to invest in the picks and shovels because that's what worked during the gold rush. And I was kind of like, I got a different approach. I want to invest in the underlying like protocol, and then picks and shovels, but this 7 network effect kind of thesis, and which eventually I was able to kind of crystallize and distill where I could like explain it to other people in 2015, but 2013, 2012, making investments in Armory and BitPay and Kraken and stuff like that, in order of the network effect. So, being willing to invest in the picks and shovels, but kind of having an idea of the timing to do that in, and seeing how it's played out has, and, some of the darts like didn't hit very close to the target, because it's speculation, merchants, consumers, miners. Like that merchant consumers thought that would come pretty early. Speculation need custody, so Armory, Kraken, and Exchange. Well, invested in BitPay to do merchant processing, 2013. We still aren't really doing like merchant, like the merchant consumer network effect still isn't like actualizing very much. And we're 12 years after that, right? And I thought that would come a lot sooner. And yet now we're building out this 6th network effect of financialization. But we can always go back and start tinkering on the 2nd and 3rd ones if we can find the technology or like innovations that can help make that take place. So it's this experiment that we're in, this trailblazing, this like building out the new world, the new continent of cypherspace with Bitcoin. Like it's fun, and you also get exposed to a bunch of the ideas when you're not in your own little like bubble, and you have to sharpen your sword, and steel sharpens steel, right? So like being engaged in the discussion and the debate like helps one formulate their own thoughts and ideas better. Unless it's with Peter.
Yeah, exactly. On the topic of Bitcoin and sound money generally, obviously like low time preference is a core theme of that. What's the lowest time preference activity that an individual can pursue from your perspective?
I think investing in oneself is probably the best thing you can do. And there seems to be quite a bit of empirical evidence and other stuff that like when you die, that's not the end of you. I mean, we have millions of near-death experiences, and all, we have major world religions that are usually founded on different stuff. And so it's like, oh, okay. So not just thinking about like tomorrow or 10 years from now or 50 years from now, but like if you continue to exist, like after you die, like how can you, like what's that going to be like, and what type of person you want to be there? Because obviously if you can't figure out how to live well here, what makes you think you're going to live well there? And so like, how can you really become a master at the art of living? And in order to do that, you really have to like build yourself and your own human capital. And what is that? Like what does it take to like really become the best version of yourself? And we have, great access to great thinkers and leaders in this area. Whether it's Buddha or Swedenborg, the great Buddha of the North, who happened to be a monetary scientist also. He helped fix the Swedish monetary system. His writings are phenomenal. And his economic writings. And as you delve into his stuff, it really helps you understand, some of the premises that do not get explained by the Austrian School of Economics. And is very applicable, I think, to, this very long time horizon of like what we want to do. And so it's, if you invest in yourself and become your best self and become a master at the art of living, then, you really get to take that with you for a long time, because you can't get away from yourself.
Yeah.
But there are a lot of people, because they don't really have this time preference, they just don't treat themselves well. Whether it's like their health or alcohol, or like they want to get away from themselves, so they're like smoking a bunch of pot, or like because they can't sit with themselves, like have a good conversation with themselves, and they want to dull the sensations or the emotions or the pains or like whatever the problem is. And it's like, well, why don't you just figure out how to like fix all that stuff, so that you can be happy with yourself, become a master at the art of living, and do it for a long time.
Yeah.
Like it's, so that's how I kind of look at it. Like, instead of running away from yourself, like, why don't you run towards yourself and, become the best version of yourself that you can be.
Yeah, that makes sense. 2 more questions and we can close it out. What's something that you believe that most Bitcoiners would disagree with?
Oh, I don't know. I don't know that there's like I can't really think of anything specifically. There's so many different thoughts and ideas that Bitcoiners bring to the discussion. And I mean, maybe the discussion we just had, like a bunch of them disagree with that. Because, I mean, I know a bunch of Bitcoiners that like they love drinking their alcohol and going out and partying and not sleeping well and treating themselves poorly. And, it's like, to each their own, but like, I just I think that when you have this long time horizon, this long time preference, like Bitcoin will begin like helping you shape your decisions in a better way. Like you'll begin to live a better life because you're changing that time horizon.
Yeah.
And so, maybe for me, I've just always had like a really long time horizon that I've looked at. Like I've never drank alcohol. Like I just don't do any of that type of stuff. Because, I want to make those trades with my future self that are going to be good and profitable. And so maybe that's it, is like, because it really much becomes a way of life and a way of lifestyle. And maybe that's where there's a little bit of difference in thoughts or ideas.
Yeah. Last question. What's the biggest risk to Bitcoin?
I don't think we have any anymore. I mean, other than losing the ethos of like what's there. But even that, I mean, Bitcoin's becoming so many different parties own and interact with it, and like the tension that's, I mean, we thought the block size wars in 2017 were big. I mean, now just the sheer tension on it is so much stronger.
Yeah.
And, there's hundreds of millions of people probably that have owned it or at least heard about it. So it's a part of the global conversation now. It's not going to go away. It's only going to get more entrenched over the next 4 years with Trump. And we saw what the Biden administration tried to do, burning the industry to the ground with Operation Choke Point 2.0 and everything. And we were able to withstand that and then flip the tide,
Yeah.
being a majority of the political contributions in the election and flipping a bunch of House and Senate seats. And so it's not going to go away. It's only going to get stronger, more entrenched. Sure, it might ossify, but if it ossifies and the cement dries, then it just is going to be a permanent fixture on the planet.
Yeah.
And hopefully we get the innovations and stuff in that we want before that ossification happens. But even if we don't, Bitcoin still got such a massive value proposition, and we haven't hardly built out what the potential that lies within it, with Taproot and other stuff. So, yeah, I mean, I don't think there aren't really any threats to it on this kind of global basis. I mean, sure, there might be MiCA law in Europe or stuff like that, but not on a global basis. It's here to stay.
Yeah. That makes sense. Well, Trace, thanks so much for taking the time to do this. This has been incredible.
Yep. Thanks so much for having me.
Awesome.
And get some Bitcoin if you don't have any.
Yes, absolutely. Perfect. Thanks, Trace.
Thanks.